welcome to our YouTube channel. It's another weekend for our weekly analysis, so we talk about what I expect of the market the previous week and what actually comes to fruition. Today's date is 23rd of November 2025, and the analysis for today will be what I'm using to decide the market from on the 24th to 28th of December 2025. So we start wasting much of our time. We are starting with our dollar index, which is our weather. Um, I've been I had the interest of dollar of bullish dollar. So as of last week, I was interested in the level 99 big figure to serve as a support to the price. That means the market price should stay above the consequent approachment of this blue shaded area, and we should be able to see as far as 100 big figure and the previous high here which has been taken. So looking to the left hand side, the coming week I'm interested in this high has been taken. So I'll be interested in this high here. So the coming week I'll be expecting the market to gravitate towards 100 500 level, 100 560. The eye of this candle is 100 540, sorry. So I'll be expecting the level 100 500 to the market for the market should gravitate towards that level as long as 100 big figure remains 100 big figure remain in support to the price, and this BC here, the buy side imbalance, sell side inefficiency here, 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 this bullish candle here, this bullish candle here. I don't want to draw it out because there are many levels on my chart already. So I'll be watching the consequence encroachment of that level to the upside. So let's go to cable. GBP USD. GBP USD last week, I was interested in the level 1.33 thousand to remain to serve as a resistance to the price that will make us see a lower price. So we've seen the the cable dropping. So the coming week I'll be interested in this low here to be taken, and possibly we should see the market dropping into this blue shaded area here. The blue shaded area is a what is it called? Is a volume imbalance and a buy side imbalance, side inefficiency also falls in that angle. So we have this volume imbalance and this buy side imbalance, side inefficiency. So I'm expecting the market price to take out this low here, taking out this low and possibly drop into the blue shaded area. So that is what I'll be watching on fiber, on cable, sorry. So we'll be watching how the market price will fall into the volume imbalance and the fair value gap. So on Euro USD, which is the fiber, I had shown my interest and how the market price will gravitate into the volume imbalance here, which it has done. So I'm expecting the market price to find um, a, a kind of resistance when it drops below the consequent encroachment of this buy side imbalance, sell side inefficiency. So if it does that and the market price found resistance below the consequence encroachment, that turns this into an inversion fair value gap. So I'll be expecting this low the coming week, this low here, then the low here to be raided, and this level should be taking a possible movement into this level here, 1.13722 on the long run. So 1.13722. So as long as the market price finds its way below the consequent encroachment of that yellow shaded area, that is that. So to S&P 500, S&P 500 has been dropping. S&P 500, Dow futures and Nasdaq, they have been dropping for a while. So I will be interested in this low here, the low of this candle, the low of that crash, the low of that candle that comes in at 6502. So it was short of some movement here on Friday. So this was 6506 before it repels. So I'm interested in this low and a possible movement into 6400. So the lowest hanging fruit for this is 6502. So 6502 and a possible movement into 6400. And then the Dow futures. So Dow future also, I'll be interested in this lows here, and then the low of this crash as well. So that'll be 45,188. So 45,188.10. That'll be what I'll be watching for the Dow futures. The Nasdaq, I think the Nasdaq has taken that low. The Nasdaq has taken this low. So I'll be watching, is the Nasdaq interested to visit, because it has taken 2400. I had my high 24,000, sorry. I had my highs on 24,000 and it has been taken. So that will lead me into, is the market price ready to give us the 23,600 level, lowest hanging fruit, 23,600 and below, 23,600 and below. So gold has not really moved significantly, so I'll be sticking to the previous week's bias that says if the gold seals the level 4,000 and it stays, then it should drop into 3800. If it does not stay below 4,000, it should give us um the 4,200 level. I think that was what I was watching. It will give us 4,200 level. If it stays above 4,000, it should give us 4,200 level. If it does not, if it goes below 4,000, it should give us 38. So 4,200, I think 4,200 and 4,150. These are the two levels I'm watching on the upside. So we've had a little movement below, sorry, short of 4,150, because this high here, the high of this candle comes in at 4,132. So it was short of some movement. 4,150 was short of some movement. So I'm still sticking to that previous graph. So to the last but not the least, which is the BTC. So the BTC has been wandering, it's just wandering. So you can just imagine the drop. Just imagine the drop. So as of last week, I said as long as the market price stays below the consequence encroachment of this blue shaded area, then 92,000 is inevitable. So we are saying the the BTC has dropped as far as 80,538. The low of this candle was 80,538. So let's see how it behaves around. It's trading around, the high of this candle is 85,142, right? So let me check it to the left hand side. Wow. So we have another block here. Okay. So if we should go below the midpoint, which is the mid threshold of this um, other block here, this other block happens when what? It forms what is wrong with my network? I want to check the other block forms on the 10th of April 2025. So if the market price goes through, blows through the main threshold of that, then we should be seeing the almighty BTC visiting the 70s level. So I'm still sticking to my previous week's bias of being bearish on what? On BTC. So thank you for coming this far with us. We really love and appreciate you for being with us, for staying with us. A quick disclaimer before I do, I am not a licensed financial advisor. The fact that I have my own money behind it does not mean you should do the same thing. Trading the forex markets comes with a lot of risk. And then the fact that the social media portrays a get rich quick scheme about the forex industry does not mean you should believe it. But it is a must get rich if you know how to go about it and you get the necessary knowledge. So thank you once again. Like, share, and subscribe for us to reach a wider audience. Thank you once again. Bye for now.